Hi, guys, and welcome to the 15th episode of WTW, the weekly trading wrap up, where we talk about the weekend markets from a trader's perspective, what to focus on, and what to ignore. So let's begin. Action packed week, to say the least. Um, as usual, we start with the S&P 500, the SPY, and this arrow denotes Monday, Tuesday, Wednesday, big Thursday, and then a huge rebound on Friday, okay, on big volume. Okay, so let's just jump into it, okay? I mean, there's a lot that happened, okay? Let's talk about Monday, okay? We're coming, but Monday doesn't stand in isolation. I mean, there was no real macro data. So Monday was a continuation of Friday of last week, okay? And if you recall, Friday of last week was options expiry, OPEX, okay? And this big down move surprised me because it was way out of proportion to what was going on at the time. So I thought it was an OPEX related event and that it would reverse coming in Monday, okay? Or maybe soon in the beginning of this week, okay, the week of the February 24th, okay. So I thought that it would start reversing because there was something weird that was going on in OPEX. However, going forward, you can tell that this move here resulted in some leveraged longs that were accumulating here, having to sell. Okay? We didn't know that at the time. We thought it could have been OPEX related, but going forward, we know that it was a lot of capitulation selling going on. So on Monday, since there was no action, I thought it was no like macro or no big news over the weekend. It was more than likely a continuation of this Friday's move. Okay, so nothing big yet because we're still coming down from a. We're still in a fairly bullish pattern here. Nothing has broken. None of these, not even this first series of higher lows was broken on the Friday, but it did on the Monday. Okay, but it's not that important. Just very small. It's a very small point here, so it's not that important. Okay. Monday was really, I thought, a continuation of the OPEX move. Okay. I didn't know it was going to get worse. I thought we were going to start resolving it and then going up to the upside soon. Okay. However, I was in for a surprise. Okay. So let's go into Tuesday this week. Big down move. You can see the wick went all the way down to like 590, but then it rebounded. Okay. So on Tuesday, what we had some macro data. We had the Case-Shiller House Price Index. It was 4.5%. They're expecting 4.4% increase. So, okay, it's not that big. We don't really look at this index, but because house prices are going up, you can say that the current market narrative is still in force. And if you recall, the current market narrative is that higher interest rates, let's get more specific, strong economic data or any kind of news that is positive will lead to higher inflation expectations, which lead to less future rate cuts, higher rates for longer, which is bad for the market. That's the current market narrative. In other words, higher interest rates are going to persist, and they're due to fill in the blank. It could be anything, higher inflation, whatever. Okay, so that's the current market narrative. And the Case-Shiller Index on Tuesday, which is this candle here, sort of confirmed or sort of helped that side. Okay, you know what I think of the current market narrative. I don't think the rates are going to stay high. It's just it's a false narrative in my view. Okay, something else that came out that didn't help the selling was that we had a consumer board, the CB Consumer Confidence Index or number came out. It came out at 98.3, and there were the previous was 104.1. So it's a big drop. So consumer sentiment was tanking as house prices are still high. So people thinking that consumers are losing their confidence to spend. While at the same time, the inflation is going to stay high. So that's another reason to sell even more. So these guys were leveraged long and had to liquidate. Tuesday's macro data gave them an excuse to liquidate even more. So they had to sell even more. So this, at this point, if you look, I like to look at sentiment to see where we're at, okay? So the fear and greed index is one of them. There's many of them. We'll see another one coming shortly, but the fear and greed index was at extreme fear at this point. Excuse me. It was like right at the border at 25, okay? So on Tuesday, you had extreme fear finally hitting the markets, okay? And the reason that this is important is that we have these guys, the liquidators of stock going into the week, now completely destroyed my previous view that this drop here was not significant. It was an OPEX type move and it would reverse. So now something real is going on. We're at extreme fear, liquidation is happening. So this is not, the OPEX move is not in effect, okay? So this is real at this point. And we're going into extreme fear, so the panic is setting in. However, as the market, you see the big wick here, it went to a low of about 590, took out the stops, went down to like 588, 589, and then rebounded, okay? So I thought maybe here, even though we're in extreme fear, that we might be over, okay? The liquidation might have been over. And because there was no more, all the bad macro data was coming out, I thought it was over. However, the big news coming into this week, they're expecting two big things in the market. NVDA earnings on Wednesday and the PCE, the inflation number, on Friday. Those were the two big macro moves, numbers that they were looking at, okay? And there was still fear, so people were afraid that NVIDIA might not do well and that the inflation number would come in hot, okay? So even though we were at extreme fear, just touching it for the first time, there was still a lot of overhang in the market, a lot of fear due to the two big macro news, I should say, or the two big catalyst events that would move markets a lot are still on the horizon. In other words, the NVIDIA earnings coming out after market on Wednesday and the PCE inflation, which is what the Fed looks at. It's the Fed's preferred inflation metric on Friday. So that would lead you to believe that the selling or the fear is not going to leave just because there's a wick here on Tuesday. Okay, so the technicals might have looked good, but the fundamentals were saying there's still some fear in the market because of the NVIDIA earnings. Okay, so that's what happened on Tuesday. Let's move on to Wednesday. Okay, Wednesday morning. NVIDIA is Wednesday after market. So look, we had a huge range. I don't know if you can see it, but look at this candle's wick. It goes from like, the lows were like 592 all the way to 599 and then settles somewhere in the middle. So that was a crazy day, okay? And that was because Trump announced that he would add some tariffs on copper and copper derivative products, okay? So we know that, and he also announced that there's still going to be a 25% tariff on Canada and Mexico that will start on April 2nd, which we have time. That could be a BS move, a negotiation tactic. But he also announced 25% tariffs on the EU. We know that that's serious, okay? So that's another inflationary event that happened because tariffs equals inflation and higher prices according to the market. So that didn't help, okay? So you had Trump announcing these tariffs early on in the day, which added to the fear and added to these sellers that had to liquidate. So you had all this news coming forward and keeping this market down, putting a cap on buyers. And you can see throughout, like I was watching throughout Monday, Tuesday, and Wednesday that there was a lot of sellers still there. Buyers would come in, but they would get overwhelmed fairly quickly, okay? So that didn't help with the tariff trumps right off the bat, okay? We had a slew of macro data too on Wednesday, but the kind of data that we don't pay attention to, except for one, we did have building permits. And if you see the building permits came in at 1.47 thousand, so 1,407 building permits were issued, which is within the range. If you look at the 10-year max, it's within this range. They're not being, they're not tanking, and they're staying within this healthy 1.4K range. Okay, so nothing to worry about in the building permits. Okay, even though the housing sector and the home builders are not doing very well. Okay, because of high rates, they're really hurting. Okay, so but building permits are still being issued, and people are still building, which is good. You want to get rid of this low supply situation. So building permits didn't do anything bad, but neither did all the other macroeconomic data on Wednesday. But for real, like, that wasn't the big mover of the day. It was really waiting for the NVIDIA earnings after market. Okay. But before we get to the NVIDIA earnings, there's one other piece of information that I'd like to mention that sort of deals with the positions that we have going on right now, and that is Meta was in talks for a $200 billion data center project that would dwarf all the other projects. Okay. Now, to me, that was significant because as the market was tanking, you had a lot of these AI and AI adjacent stocks, like the uranium stocks, that were taking a hit. Okay, and primarily we had CEG, which is Constellation Energy. If you look at it, this is Friday, this is Monday right here. Okay, so it was taking a hit. Okay, it was taking a hit because people were afraid that they weren't going to build as much data centers, and the AI infrastructure wasn't going to get built with like Microsoft threatening to pull out of the 3 Mile Island deal, etc. So the air is being let out of the AI adjacent stocks because people were afraid that they were not going to spend money to build these high-end data centers, which would require a lot of energy, and the primary energy that they love is nuclear because it's reliable 100% and it's cheap. So they were not going to make any more deals with nuclear power plants to power their AI data centers. Okay. Another stock was GEV, another darling, GEV, GE Vernova. That fell down as well. This is another one that they were looking to, is the AI adjacent uranium type play, or energy type play, I should say. It has more than uranium. So all these companies that are AI adjacent, the power centers of the AI movement, were getting hit, okay, because of the fear that they weren't going to spend. Big players like Meta, all the AI guys, Meta, Microsoft, etc., were not going to spend money on data centers. So that tanked the industry, okay? But now, going back to SPY, we had the news on Wednesday, which is this day right here, right before NVIDIA earnings, that they're going to do that. So that's positive in my eyes, okay, going forward. However, the big fear, that's not going to overpower the big fear of like capitulation selling from people that were leveraged long, and NVIDIA coming out after market. Okay, so what happened after market? NVIDIA on Wednesday, which is this is Wednesday, but they announced after market, so Thursday, we'll get to it later. But on Wednesday they announced, and if you look at the earnings here, they beat. They beat on both top and bottom line. Okay, not by a lot, but they beat, and their guidance was very good. So they had good earnings. So that was a relief. However, it wasn't going to stop what's going to happen the next day. But for now, the market, like if you're going to go to bed tonight, you would think on Wednesday night, you would think, oh, it's okay. NVIDIA passed, so maybe this might be the end of the capitulation. Okay? Was that the case? No. Let's go into Thursday. This big candle here. Okay. So Thursday. Let's get the initial claims out of the way, because that's the only macro that came out that matters to me. So initial claims, where are they? Initial jobless claims. This is a note, okay? 242,000. Remember, they were very low, and now initial claims come out, and a lot of people, 20K more than the previous number of 220. 22K more, which is a lot. That's a lot of claims coming in 1 week. Okay, so that, it could be just a one-off like these guys before going down again, but we should note that this is sort of a negative for us. They're starting to pick up, and we don't want that. We realize what happens when they start picking up. It's a precursor to a recession, which could be around the corner. okay? Or we could actually be in it, who knows? Okay, so initial claims, we should note this. It didn't come down here, and we could have like blown it off, but it's of note. Even though it was dwarfed by what was going on, like the big macro sell-off that was going on, we should keep a note of this, okay? That was on this big candle on Thursday. What else came out? Trump came out again talking about tariffs, and that was it, okay? All of these leveraged longs, it was like selling all day, no green candles if you look at it. If you look at the intraday chart, okay, let's look at the 15-minute chart. This is Friday. Thursday. So, it started out fairly okay, and then by 1 o'clock when they had to cover, boom, big sell-off. Okay, let's go back. Love the giant arrow. But anyways, let's go back to the day. Okay, that was this big Thursday. So these guys now, we know for sure that there's capitulation selling, and they have to sell, and they probably have to sell before Friday, before the month end, okay? Because not only is it Friday, but it's month end as well. So this was very devastating. Okay, this was a big bad day. And what came out on Thursday, we talked about the fear and greed index that I like to look at. Okay, by the way, here we were at like 19 or 18 extreme fear. Okay, on Thursday. But also what comes out on Thursday was the AAII investor sentiment survey, okay? And it comes out once a week, but it's very comprehensive, okay? 60.6% of the people were bearish, which ended up being the 1-year high, and 19.4% were bullish. This is very low, okay? The averages are here. The historical averages are 31% bearish, okay? And 37.5% bullish, and we're really below the bullish thing. Okay, and they're not even neutral. Very low neutral reading too. Like people are really bearish. They're taking positions. Okay, so you can tell that a lot of puts are being bought, which also exacerbates the downward pressure, because as puts are being bought, the market makers have to sell stock, the delta hedge, so it adds to the pressure. So all of that extreme negative sentiment, people having to sell because they were leveraged long from Friday of OPEX. I mean, they were leveraged long before that, but Friday was the catalyst that kicked the selling off. You never know what it is. Something always happens. And now you have this comprehensive index of extremely bearish views, okay? And like you can download this data. I downloaded it here. Where is it? Here. Like this is the AAII sentiment data. Okay, look, you can see 31%. These are the averages of bearish. The column is bearish. This is the bullish column, and this is the neutral column. And you can see it gives you the standard deviations and everything. And it goes by week. It's announced every Thursday. So here you can see bearish was 60.6% bearish, 20% neutral, 19.4% bullish for the 27th. Okay, and they give you the minimums here. Like if you look carefully, if you go down, it's very comprehensive. They give you the minimum for 87, 1988, goes all the way back to 1987 data. Okay, it's very comprehensive. Okay, and you can see the minimums here. Very rare do we look 23s. Very rare do we get to the minimum of 19.4. You'll see we see a couple of 12% in 1989. These are the recessions. Those were pretty low. Okay, minimum bullish sentiment. Okay, so getting to 19. Okay, when the market is not even 4% off the highs is very rare. Here we're in a recession. 89, 90 is when people were going into recessions. 1990 was a recession. Okay, so we're not even there yet, and markets were pretty low. We're 4% off the highs, and we have a minimum a bullish rating of 19, which is close to minimum levels. Okay, fear levels, extreme fear levels, and bearish. They don't give the maximums here. They give the bull spreads. They don't give the maximums, so you had to like scroll through to see what the maximum bearish are. And I found that what was it like in March of 2009 during the absolute lows. Like if we look at the, let's go back to SPY. Okay, and if we go 2000, let's go to the monthly here, monthly chart because we can see it clearer. Okay, this is 19. Let's go to 2009. Okay, 2009. March here, right at the lows. April, March, these around here. February, March. Let's open it up. It's probably this guy right here. February, yeah, that's March. Right here, March. Right at the capitulation lows of the GFC, the great financial crisis. Okay, it wasn't a recession, it was a great financial crisis. Right at the absolute lows, you had a reading, a bearish reading of 70%. Okay? So let's go back to present day. Go back, come out of the time machine, go back to the present day, into the daily chart. On Thursday, you had the numbers coming out that we are at. No, that was the fear and greed. We were looking at the AAII 60.6. And it was 70 at the very bottom when the markets were tanking, already down 50+%. You had a 70 reading. So this is extreme. We are close to, at that point I'm saying to myself, started buying, okay? Started buying even more. I remember buying when it was on Wednesday, and then I started buying again at a little bit too early at 594-ish. 594, 593 on the S&P 500. But look, that was in the morning, and then it just tanked all day. So obviously, it's not a timing indicator. Okay, I suck at timing. But we are close to the bottom, okay? We are close to bottoms. We don't know how far it could go. It could go much lower because, look, if you look at the greed index, excuse me, the AA sentiment index, okay? AAII sentiment index. You saw for weeks they were at 42, 47, 40. That's a huge difference from 31. They were at extreme levels with bulls pretty low. Maybe not this week, but at 29, it's significantly lower than 37.5, okay? And you had big readings here. And this was last week and the week before. So if you look at SPY, remember, last week and the week before, we're right here. And you're getting like bearish, you're getting readings that are like bearish, okay? So that's why I wasn't selling. And by the way, when we were coming to highs here on the SPY, the fear and greed index never went to greed. It was always at neutral. So that's why it was almost like a trap, because I'm not going to sell when it's at neutral and close to fear and at highs. So people at highs here the past couple of weeks were at fear, like bearish, I should say. 47%, that's a big bearish move 2 weeks ago. Okay? So 2 weeks ago would be one, like right here. They were bearish. Right around here. These weeks, this area right here, they were bearish, and we were like 2% off the highs. Okay, so even there I would be bullish. Okay, because you had these readings 2 weeks ago, because this is this week, past week and this week, around here. They were very bearish on the AAII investor sentiment survey. That's why it's not a timing indicator. Okay? It doesn't. You shouldn't use this, and you shouldn't use this on its own. You're going to get murdered. Okay? You should have to use it in conjunction with other things. Okay? And this is why this was a perfect setup. Perfect setup to screw the longs. People went leverage long here because everybody was fearful. But look, the market will do anything to surprise you and take you out of your game. Okay, so I started buying here, and I was wrong, because I thought we were close to the end. We were getting into fear, extreme fear. Excuse me. We're always at fear. We're going to get to extreme fear. I just thought that if people are bearish up here, that it would go up a bit higher before tanking down. I thought it would go up to 620 first, because we were like at 605. I thought it would go up to 620, 630 before tanking again. But nope, it did it way before. OPEX was the trigger that got these leverage longs to sell and continue to sell. And by the way, these margin calls are coming. Okay? Margin calls are coming, and they had to sell. Okay, so Thursday was a very, very big down day. And Not only that, but we still had the PCE inflation number coming out. So they were scared of that. And because everything, the inflation expectations, every other macro data was saying that inflation is going to be hot, whatever. And they were expecting a hot number. So they were using the previous news to anticipate that the PCE was going to be hot. So they started selling. You had the perfect storm to keep selling even more. And look, they sold a lot. We went from what? Almost 600 on, we climbed to 595, almost 600 on Thursday. And it took it down to 585, 15 points on the SPY. That's a big move. That's 1.6%. That's huge. Okay? So that's what happened. That was the devastation on Thursday. Everybody here was panicking. And by the way, this gap got covered. I was mentioning it on Twitter that you could follow me. I was saying these things as the days were happening. Look, NVDA beat. That was the gold thing. Here, gap fill, blue arrow around 585. So we had the gap fill on Thursday. This was the chart on Thursday. It had the gap fill. I don't know if I can click it here. It shows you the gap fill that happened. Okay, so we had all of these incredible things happening. Fear at 18 to close. Okay, this is on the close. We were at 18 fear right here, when previously we showed that the AAII investor sentiment at 60 and fear at 18. By the way, I remember the fear at 2020, March 2020, when it crashed, it was around 15 on the CNN Fear and Greed Index. We were at 18. Literally 3 points off of fear. With markets, at this point, I think it was markets like 4% off the highs. Okay? And by the way, guys, okay, this choppiness is consolidation at the top. Okay? Look, we're consolidating at the top. We haven't even dropped. Look at this. This was a bigger drop. Okay? Within a bull market. Okay? Don't forget that. We still have the major lows are still higher than the previous one. Okay? This was a major low here. So this is important to look at. Okay? That's important to look at. Sorry, I had to do this. I'll close my interactive brokers. So where were we? Okay, we had extreme measures, extreme fear on Friday, covering the gap, capitulation selling, and I thought this might have been the day, but you don't know because everybody was scared going to bed because the PC comes in hot, it can go even lower. Despite the fact that we had a of 60%, it could go lower. Okay, it's never 100%. You're just playing the odds are on your favor by going. Remember, I went long here and I'm wrong. I'm down at 594. This is 585. Like another 10 points on the SPY. Okay. So I'll get back to what I was taking intraday here on Friday, but let's go to Friday right now. Okay. Friday was the big day. It was the PCE number that came out on Friday. And it came out at 0.3%, which is what was expected. So it was in line. So everybody's fear was unjustified. Okay? Did the market rip? No, it didn't rip. Okay. We had a very interesting phenomenon happening here. Okay. Let's go to the intraday charts and discuss the technicals about what was going on Friday, which was very important. And why here you should have been a little bit wary that you could have gone even lower. Okay, I wasn't really paying attention to it at the time, but you'll see what I mean when I get into it. Okay, so let's go to the 15-minute chart again. Okay, this is important. Let's talk about the technical aspect here. Okay, this was. Let's delineate. Friday here. Okay, let's delineate it. with an up arrow. This was the beginning of Friday. 9:30 open, boom. Thursday was around here. Thursday open was here. This guy right here. Opened higher, remember, up to almost to 600, only to drop by the end of the day to 585, 15 points on the SPY. Okay, so this here was Thursday's. Mark the down arrow, Thursday. Thursday morning, each candle, by the way, here is 15 minutes, is an intraday chart, okay? Now, why, we'll talk about Friday's action first, okay? The reason why the market was still weak, it rebounded a bit, only to come back down again, okay? And the reason why this happened was, and it confirmed all of our expectations that there's liquidation going on in selling, is that there was still selling pressure. Look, buyers tried to come in after the PCE came in line and buy it, but then they got sold off hard. Why? Because they still, leveraged longs still had to capitulate. There were margin calls going on. Margin calls were definitely happening on the last day of the month, okay? 100%. Because you can see the selling pressure was still heavy, okay, up until 2:30. Why 2:30? Here. Why? Because that's when you have to cover. And buyers started stepping in, trying to take in the last of the sellers, trying to take in their last lots as the sellers were capitulating and being margin called by the broker, okay? So the buyers stepped in. So once these are the last remnants of the sellers for the entire week, which started here. The big arrow denotes it, okay? This was Monday. So all this selling in the week, continuation from Friday, resulted in a capitulation sell-off margin call by 2:30 on Friday. And once these sellers are gone, look, nothing but green candles. Every 10-minute candle after 2:30 was green because there were no more sellers with a big move on the end. So this is why I said in my Twitter here that today was most likely the capitulation bottom. Okay, I'm shooting this on Friday. And this is about the close on Friday, okay? Some very interesting action on the intraday charts in SPY today. This is what I'm talking about right now, okay? So this is what the this is not just technicals, okay? This is a representation of the fundamental action and what's happening in the markets because of forces that others have no control over. If you're going to get liquidated, if you're going to get margin called, your brokerage is going to liquidate your account. You're too leveraged, I'm going to sell you out. And this is what happened, and it was the culmination of the selling by 2:30 on Friday. That was the result. And I was expecting to see this kind of move afterward. I told my friend that, watch, after 2:30, you're going to see nothing but green candles. Okay? And that's exactly what happened because it's confirming that the liquidators are out. The margin longs are out. It'll be interesting to see what happens the weeks going forward. I'm bullish. This is a very bullish close in my view. Okay? So all of this selling resulted in a capitulation sell-off. Now, let's go back to the day for a while and to tell you why on this day, let's get rid of these arrows. We don't need them anymore. The red ones. Okay. Why that this day, this big sell-off that happened might not have been the low. Because this looks like a wick that it could have been a low. Yes, there was news coming out on NVDA and the PC, but why, technically speaking, it doesn't always work, but when the technicals align, you had a little clue around here as to why there could have been more downside. Why? Let's go back to the 15-minute chart. Okay? And this I should have recognized, but I didn't. It went past me, but let's go to this is the RSI. Okay, you can use any MACD or whatever, but let's look at the RSI, Relative Strength Index. Okay, Monday. Okay, I don't know. You want to move this candle? Okay. It's important because this is Monday right here. Okay, and as you can see, the market was making a low, and the RSI, the Relative Strength Index, went into oversold territory. Everything under the blue here, the blue shaded, is oversold, which is like the 30. The 30 level is oversold, and the 60 level is overbought. Above the 60 or the 70, the 70 is overbought. Okay, so let's look at why this was on a Tuesday. Okay, look, the market made it in the intraday chart, made a new low, but also the RSI made a new low. It was lower than the previous low. Okay, so that's what we call normal. It's not, there's no divergences here. It's normal. So you could expect another down day. Okay, because there was no positive divergence. What we want to see, and we want to put all the odds in our favor when we're trading, is we want to see positive divergence. Okay, and that's why, look at this. What I mean by positive divergence is this low here made an RSI low here, but then a new low in the market did not result in a new low in the RSI. So you had one going down and one going up. This is positive divergence. This is very bullish. This is a bullish sign. It's telling you that the selling is getting exhausted. It's starting to get exhausted. It's not perfect, doesn't always work, but it's telling you that you're hunting in the right area, in elephant territory, okay? I don't like that term, but whatever. This new low, not making a new low on the chart is good, okay? And this was on a Thursday when it went even lower. So that's why I was a little bit heartened that we're getting close to a low. I got in at 594, 593 on the SPY on the Wednesday right before NVIDIA earnings. Oh no, excuse me, I think it was after that NVIDIA earnings. Okay, and on Thursday 94 started buying more here because you have to buy when you're at extreme fear at like 18, or even 18. And now you have a technical indicator that's telling you that the selling is getting exhausted, and you had the fundamental view, or the fundamental fact, I should say, of capitulation selling and margin selling by brokers that had to dump their clients' accounts. Look, you had a little mini positive divergence again when you had this low, and this low that went even lower than the previous low, and yet the RSI is still higher. So you had a new mini positive divergence from the maximum positive divergence here. So you had everything in your favor here, including the technicals, that we did not have coming in on Monday, because Monday there was no positive divergence. It was just normal. A new low was followed by a new low in the RSI, a new low in price, followed by a new low in the RSI. So there, you should have had a clue that maybe there could have been another shoe to drop. And that second shoe that dropped ended up being less powerful than the first one, which means that we're sort of getting close to the end. So that's why I was heartened by seeing this positive divergence in the intraday charts. Okay, so that's the technical aspect of Friday, which led to a lot. Okay, so we had the PC, we had a close on the daily chart. Let's get rid of the technicals. I don't really look at the technicals, but it's good when they support your other view in terms of like the fundamental picture of capitulation is coming to an end, and the technicals showed that the selling is coming to an end, and it showed it to you, but in a different manner. Okay, so this is like a railroad track. It's like a very bullish pattern. Okay, this is the Friday close on big volume. Okay, I would have liked it if it went even higher, but this is pretty good. Okay. So what else happened on Friday that is of note that we should mention? These are extra stuff that I like to mention. Okay, at the end of a very crazy week, it's good to see Friday opening up into a bullish pattern. Okay. Another thing that came out on Friday is the Fed's GDPNow forecast. Okay, remember that this is the GDPNow forecast. Okay, it came out. Okay, it came out at minus 1.4%. They expect GDP to contract by minus 1.4% on the first quarter of 2025. We'll find that out 2-3 months later, but okay, that's not good because forever, like if you go back, 5 years, you see it was always 2020. It was always about 2-3%. Okay, and if you recall, one of our macro backdrop points was we want GDP to hold between 2 and 3% going forward. Okay, this is the reason to stay bullish. Okay, so now this is our macro backdrop that we developed in November of 2024, and it still holds. Okay, so we want, this is the GDPNow, Atlanta Fed GDPNow estimate. It's always around the 2 and 3%. Okay, but now we see that estimate. Let's go from the Fed. Okay, so let's go to 1 year. So we see that their estimate that came out on Friday is now minus 1.4%. They're expecting GDP to contract by 1.4%. So this is not good going forward, but it's not time to immediately panic. Maybe we should panic in 2-3 months, okay, when it comes out. But now that's not the time. Okay, and it gets revised. Like as time goes by, it gets revised. Okay, so we're not sure if it's going to contract. And a recession is when we have two contractions in a row, two contracting quarters in a row. Okay, we don't have that yet, but we could be on the cusp. So this is of note that our bullish thesis might have to be amended soon. Okay, keep that of note. It's important. Okay. And the other thing that I'd like to mention that we haven't seen in a while are the yields, 10-year yields. This is when we talked about it last. Remember, let's go at the overall picture here. Remember, yields are in a range. They were going down, okay, because we had a series of lower highs, only to be broken when the bond vigilantes and higher for longer interest rates. Remember the current market narrative, higher interest rates due to fill in the blank. In this case, it's inflation. Okay, so people thought there were going to be higher inflation and that rates have to stay high, okay? And here we mentioned that we had a comeback because it broke up. We had rates coming down again, the US 10-year yield, okay? So yields are coming down. But at this stage, we were uncertain. Like both camps, both bulls and bears had reasons to support their thesis because the bond vigilantes, which are the higher for interest rate people, just saw this as a normal pullback, like this is a normal pullback before another up move, a normal pullback before another up move. And I was skeptical. Here, if you go back to previous WTWs, when I mentioned this, I expected to go down from here. Okay, you can go back and you'll see. And that's exactly what's been happening the past 2 weeks. We have rates going down. Okay, maybe the GDP forecast going down. Also, the GDPNow at minus 1.5% going forward. There's no way rates are going to stay high if GDP contracts. Okay, so that's another reason that rates are going lower. So I don't believe this bond vigilante narrative. And yes, indeed, they are going down. Okay, and mirroring this is the TLT, the 20-year bond. You see, it's going up. Still stuck in a range because rates are stuck in a range. It's the inverse. Like you see, look, higher highs was broken. It's just a mirror image of the US 10-year. So I just like to use the US 10-year. And when I say buy the TLT, I'm saying that rates are going down. Okay, I mean, you don't have to buy the TLT. You can express yourself in different ways. But I found it necessary to revisit our yield, our US 10-year yield, to show that it's going down. Okay, and it doesn't support the higher inflation narrative or the current market narrative, I should say. Okay, we should note this. This could be a reason going down. It could be a bad thing. Okay, so we have to note this. Okay? Not right away. Things don't happen right away. Macro takes time. 1, 2, 3, 1 quarter, maybe 3 months. Okay, this could be a problem. Okay, and another thing that should be noted on Friday is, and we should mention for the whole week, is Bitcoin. Okay, we mentioned it. You see, going down. This was Monday, right here. Okay, so we have Monday, Tuesday, Wednesday, Thursday, Friday. Total destruction. Okay. Monday came out. I was still sort of positive Bitcoin. I went long here, various vehicles. Obviously, I'm wrong. I also tweeted out during the time that once we saw it capitulating on Tuesday and Wednesday, it's going to go with the market. Okay, if the market's capitulating, everybody's selling. They're going to sell their Bitcoin. Okay, they're even going to sell gold. Okay? Go back to gold. You see, gold is being sold off as well. Okay, they're going to find something for liquidity. Okay, but as you can see, the gold picture is much better than the Bitcoin picture. But let's go back to Bitcoin. Okay, this is what I want to mention. Okay, this has to recover quickly. It didn't because of the capitulation, but if it does, we have a chance. Okay, it can't just stay around here, and it'll probably hit this level, which was support, and now it's going to turn to resistance. Okay, that's not good because it'll hit this and probably go down again. I'm expecting the market to go up, so I'm expecting Bitcoin to go up with it. However, because this was such devastating damage, I bought call options. I gave myself some time. The call options are probably not going to be as profitable unless we have some crazy move, unless the narrative completely changes. Trump says something about, I'm buying Bitcoin now for our reserve, and it just rips the highs. I will not follow this plan. But from now on, like, if Bitcoin comes back and I have a slight profit in my options, like if it goes around, I'm going to take it. Okay, because this damage has been technically vicious. Unless, like I said, something fundamental comes along like Trump or whatever, that changes my picture. But right now, this technical picture, if it doesn't recover quickly, it's this trade is going to be a loser. Okay. So that is my view on Bitcoin. I'm still bullish, okay, because, breaking this out, you can even retest this and go back up, but Bitcoin is so volatile that anything is possible. Okay. So it almost gave back the entire Trump move. Okay? However, this candle is very bullish. It went all the way down to 78 at one point, 78,000. And now it's at 84. So this wick is very, very, it's positive. I'm optimistic, slightly, but there's a lot of damage that has to be recovered first before I rechange my mind, or I change my mind. But so this has to come back quickly. To reiterate, this has to come back quickly and recover this level quickly for me to remain super bullish. For me to remain bullish on Bitcoin, because this is a loss so far. If it doesn't come back quickly and it starts hovering and doing its stupidities here, this is going to be a losing trade, and I will get out whatever my loss is when it retest this. But if it comes back quickly, like in 2-3 days, like next week, then I'll maintain my bullish look. Okay. But if it starts hovering around these levels, no, you have to admit that it's a loss. And if it ever comes back here, this is where I'm going to take less of a loss if it doesn't come back quickly. Okay. So that's my view on Bitcoin going forward. So that's it. That's it for the week of the 24th. Still a bullish pattern. It hasn't broken the major. Still a series of higher highs. We've had extreme fear, okay, in this index, in the fear and greed index and the AAII. So I'm bullish going forward. I still think we get to the 620, 630 area, and maybe 630 I think we're going to get to, because this is a lot of capitulation, a lot of leverage guys got out, and a lot of people were short. Okay, so the pattern is still bullish. We're still chopping around, and the longer we chop around here, the breakout will be better, much more powerful. Okay, so I'm still going on the 620, 630 level, maybe 630 here as a next up leg. Okay, I'm waiting for that because I'm still bullish up until April. Okay, so March, April, actually from November of last year till April, I'm bullish. Okay, then we'll see, because we're starting to get some worrying signals in the GDPNow forecast, as we saw before, and in the initial claims if it stays up and keeps going higher. Okay, we're starting to get some cracks in this bullish thesis, but it's still not done yet. Okay, and this extreme sentiment here that we saw with this bullish railroad track pattern in the technicals gives me heart that we're going to explode much, much higher. Okay, we still have a lot more to go. Listen, we're at 594, 630. That's 35 points on the SPY. That's a big move. Okay, that's like an 9% move, whatever. So was it 7-8% move on the SPY is big. Okay, you can make a lot of money. Okay, so as things stand right now, after a devastating week, the overall pattern is still bullish. I'm still bullish going forward and looking forward to next week.